Mike, when we talk about people who time the market, what are they looking for? They're looking for growth. They want to move that number as high as they possibly can. But the fact of the matter is, as we get toward our 60s, we should be kind of flipping that pyramid and saying it's more about protection and income than it is growth, correct?
Well, absolutely. Absolutely. And if you think about it, as a phase two fiduciary, we look at things a little bit different. When you were young and, you were riding your skateboard and you're doing, wheelies on your bicycle and you were doing backflips and, playing sports and football and soccer and, even for that matter, dance, all those injury issues, you just went to a pediatrician. It was no big deal. It was just part of life. And unfortunately, our industry has taught you that the ups and downs of the market are part of life. And yes, they are, but they don't have to be, right? I mean, that's the most important thing. Our industry spends a lot of time telling you that your only choice is to either A, put all your money in the stock market, right? And you just hope for the best, or you take the Ken Fisher approach that I hate annuities and you should too, and never buy an annuity. But the fact is as a fiduciary, when you went to the pediatrician, that was all well and good. But now that you're an adult, you probably are not doing skateboard flips anymore. You're probably not doing wheelies on your bicycle anymore. You're probably, you might be still in dancing, that there's still some enjoyment there. But the reality is that you need to work with somebody who understands the nature of not just growing the money, but growing it tax efficiently and making sure you never outlive your money. I mean, as you mentioned before, Warren Buffett rule, right? Rule number 1, never run out of money. Rule number 2, always remember rule number 1. So here's the thing. When you sit down with us, and this is what we did for Rose, when you sit down with us, we're going to show you your options, right? Because it's not one size fits all. We're going to show you how to create income using the stock market. And for Rose, she had to put $1 million. That advisor was correct. $1 million in the stock market. She had to earmark the $1 million, couldn't touch it and use it for anything else, because if she used that $1 million for anything else, she would not have that $40,000 income stream. So she had to earmark that. That gave her about $200,000 worth of wiggle room for the extras of life. And our experience is that people spend more money in the first 10 years of retirement than they do at any other point in the retirement. Between the honey-do list, the bucket list, and the round to it list, you're spending. And quite frankly, you don't even know how you got anything done while you were working because you're so busy being retired. But one option is, do exactly what most advisors do. Take the 4% rule, even though we know it doesn't work that well. Do the 4% rule. He told her to put $1 million, gave her $200,000 left over for wiggle room. You know what? We're going to show her the same thing, but we're also going to show her what happens if you use preferred stocks and dividend-paying stocks and high-yield stocks, that type of stuff, something that might produce a little bit better lead. Well, at that point, she could probably put away about $925,000 is what we came up with, and so that left her about $275,000 of wiggle room. That was an option. And a third option is to buy that annuity. I know Ken Fisher hates them, but the fact is annuities fit for the right person for the right reason, and so for about $650,000, she could create the income stream. And what Rose was able to see is that, look, I have 3 choices to create income stream, because the reality is there's, other than, rental properties and stuff like that, from an investment point of view, there's really only those 3 choices. And which one is going to, A, make you feel the most comfortable? Do you want to transfer the risk to some insurance company that the insurance company itself is going to guarantee that income stream? That's because that's an option. Do you want to retain the risk with preferred stocks and dividend-paying stocks or the stock market? What Rose decided for her was that she wanted to transfer the risk. More so, not because she was transferring the risk, but because it gave her the most flexibility and wiggle room, because she had almost $650,000 left over for the extras in life, for the playtime, for the honey-do list, the bucket list, and the round to it list. And she did not want to make the commitment of so much money to a single source just to create the income stream.
And Mike, just as a quick follow-up, we got just a minute or so left here. When somebody tries to time the market, you've got to be right twice. You got to get out at the right time, and you got to get back in at the right time. And how many people can do that? And how many people on Wall Street can even do that? Not very many.
Well, that's a fact, right? I mean, if everybody could time the market properly, everybody would be timing the market, and none of this rest of this would be relevant. The fact is that what I always find interesting is that when you're selling, that means somebody else is buying. And when you're buying, somebody else is selling. Now, both of you think you're correct, right? Both of you think you're correct. And yet, Only one of you is going to truly make the money that you thought. Only one of you is going to be correct on that timing. So from my perspective, timing the market and doing all that stuff that you did when you're 20, 30, 40, maybe because you could have some wiggle room and playtime with it. Okay, maybe. But at this point in your life, it's all about protecting, preserving, and distributing in the most tax-efficient manner possible. Pick up the phone, 866-597-1040, 866-597-1040. But you know what? Like Ryan always says, if you don't like to call and you just want to go to our website, the Savvy Investor Radio, there's a little button at the top of it that says income planning. You can literally click that button that says, I want to do income planning, or I want to do tax planning, or I want to do a portfolio review. You can click the button and schedule that 15-minute call that we always talk about and sit down with our team. Make sure we're the right fit for you. Make sure you're the right fit for us. But we can tell you exactly what we can do for you to get you onto that road to retirement so that you have the income that you're looking for, so that you have the tax plan that you're looking for, so that you have the estate plan you're looking for. And when I say looking for, that you have the income you deserve. You've worked hard for it. That you have the tax planning that you deserve so that you're paying the least amount of taxes legally possible, and so that you have the estate plan that actually works the way you think you're going to need it to work. Pick up the phone, 866-597-1040.
And our website, again, is thesavvyinvestorradio.com. You'll see all those buttons there. If you've saved $500,000 or more for retirement, I mean, think about what's in your 401k. Maybe you've got two 401ks. Maybe there's a pension there. You add all that up, it's a pretty big number. And that's what you've got to work with in your retirement. Let's show you how to make the most of it and limit those taxes in retirement. Here's our website, thesavvyinvestorradio.com or 866-597-1040.